Good morning, welcome to Morning Outlook. This is Kim speaking on Thursday the 13th of January. So starting off this morning slightly earlier than I used to, but it's a little problem with scheduling things on YouTube. They've changed things, so 7:45 is it's either that or leave it another 10 minutes. So I'd rather be doing it sooner rather than later. So 7:45 from now on, just a reminder, or roundabouts. I may be a little bit late pressing the button if I can hold off. Anyway, let's look at the markets this morning. As ever, I start looking at the potential risk into these markets, and looking at it today, we've got Thursday 13th, we've got the PPI out later on the US, so it's all US, a market driven by the US again. We've got the FOMC member Brainard. She is going to be testifying in front of the governors from the Senate Banking Committee. So whether there'll be much said there, she's been nominated, I understand, and whether this is the vote to accept her, I assume it may be. But anyway, she's already released the testimony from this, the actual testimony itself. So it's going to be something more about Q&A than it is anything else. Then we've got bond auction at 6 o'clock. Not really going to move too much in our day trading forex. So let's leave that alone. Let's have a look then at the markets themselves, and as you may have noticed, the Euros, amongst others, has taken a bit of a move up, and is pushing up at the moment. As much as fundamentally it doesn't seem right technically at the moment, that's what it's doing. And at the end of the day, you sort of just, as much as the fundamentals may seem a bit wrong, you've got to look at the technicals and what's actually happening, and there's no point arguing with it. Because this is complete oddness, but we've seen a long squeeze on the US dollar effectively, and we've seen the consequences of such. So the US dollar being sold, having been a favourite of many for a while, and we've seen it squeeze. Now, important thing here is to look at the bigger picture. The euro dollar is the best one to look. I say best one, but one of the best to look on it, because it's it shows the inverted dollar index effectively of what's happening. And you can see these are sort of broadly based waves. First, second, third wave down. We've been in this fourth wave for a while. It's no surprise that really it's had a little bit more to the upside. I mean, if you compare it to the second wave here, which we should be doing, it's really hardly done anything. It's been just mainly consolidated, which if it had broken straight down would have suggested even further weakness and maybe a bigger fifth wave when it eventually comes. But for now, I'm looking at this sort of 221 area on the weeklies basis. So for resistance, this could run all the way there even today, maybe just slightly through, we'll see. But certainly could run in that area. One area, or one point, if it was to break the low of the first wave here, being a fourth wave, that shouldn't happen. So what that would suggest is we're back into a run on the euro. So that is a sort of a maximum point. So if you're looking at that weekly 50, the probability is not good, but at the moment, but could happen. But as I say, at the moment my focus is on the reaction to its 221 here. Fundamentally, just a word on the fundamentals, then I'll move on quite quickly. Fundamentally, the Eurozone suggests that their inflation is going to come down quite quickly now, relatively quickly, so they won't have to increase interest rates. So you're going to get this two economies, one that's absolutely firing away relatively, low unemployment and interest rates increasing, etc., which makes it more positive buy sort of thing, particularly for the carry, and one that's suggesting, well, no, it's all okay, we don't need to increase rates or do anything, we can carry on helping the banks make even more money. Either way, we're sort of it seems against the way things should be, but that's the way things are. So we just trade as what we're seeing technically. And we're seeing at the moment this push up. It's broken through some quite key trends here at the moment, so it'll probably get more and more traders in. There was a whole stack, I don't know if I've still got it to show, he says. Yeah, I have. So this is how things looked on the order book yesterday. If we can stay still on this, let's just get a pen, and you could see that huge amount of buy orders sitting above the price level, so it didn't take too much to get that running, and saw the market just pushing up there. So huge amount of buy orders above. Right, anyway, so euro at the moment still looking short-term bullish, maybe even longer-term bullish. It has got a bit of divergence as you pull down the time frames, but I'll just wait for a bit more confirmation. We need to see these lows taken out for me to be on the short side of this at the moment. As I say, the long squeeze seems to be continuing for now on the US dollar. Okay, looking elsewhere, the pound. Well, the pound also, well, Teflon, I saw it mentioned as earlier on, is it can do net. Well, the UK government can't do anything. Well, they can do plenty wrong, but they don't seem to be punished for it. And the pound is, although there's this risk of a potential new prime minister being called for all of the time, it's made no difference to the Teflon pound, and it's continued to push up strongly. I've said this for a while. It's the stronger one of the stronger pairs. I've seen money coming into it from the big money coming to it, and well, there you go. That's the response we're seeing at the moment. Well, again, it's probably a bit overbought in some time frames, but for now it's continuing in its wave structure. It's much more solid, and on the bigger waves I'm expecting this to continue. It bounced off a 38% retrace originally of the overall pattern, and it's got some more potential, as I say, to the upside. Now, of course, I'm saying that, then looking right onto the daily 200, and that could stall things. And coming back to the 60 minutes, I mean, it's got some divergence across these highs, or had some. It's just working off that divergence across the highs, but it could break that trend line at some stage. If it starts breaking down, well, we may get a bit more of a correction, but Teflon pound may just carry on. Looking then at the Dolly Yen. Dolly Yen continues selling off towards its pivot here, the monthly pivot. Again, we're seeing sort of this, I say risk on, risk off, but it certainly it seems risk back on. We're seeing money running into like the euro. That's risky. So you're sort of seeing this risk coming through. Normally, we would expect the yen to be pushing up at this rate when the risk is back on. As the yen gets sold, the safety currency gets sold. But for now, it's everything seems to be benefiting from a softer US dollar. Okay, so target at the short term there would be that monthly pivot, the way it's running, lower highs coming through here, solid movement, and well, nothing. I mean, double bottoms may stall things, but for now it really is running to the downside. I mean, you saw yesterday it broke that trend line, rolling over there at 1 o'clock, 1:30 actually, even though the data was pretty sound from the US. Or I say data was, the inflation was high. When I say sound, which just pushes more pressure on the interest rates being increased quicker. But that's priced in largely. Anyway, Aussie dollar, it's just come out here. Aussie dollar now getting back into the, again, this was one I identified as being one of the stronger potential currencies, particularly technically on the bigger picture. And we're seeing this, and we're seeing the money coming into it as well, sentiment coming into it, and we're seeing the Aussie dollar pushing up today. Being one of the, if not the strongest. No, New Zealand dollar at the moment is the strongest against its peers, etc. The Aussie dollar's second strongest, so continue to push up now. Now these, again, there's divergence sitting here on the 4 hourly. when you get moves that go like this and push up like this, well, there's bound to be a retrace at some stage, maybe, or just more consolidation and another shove. But again, it's a patience game for me, so we'll just need to sit and wait. Not in the trades long, so as I say, it's a waiting game. Anyway, that's that. Let's look at so the Aussie dollar, as I say, just pretty much all the same picture we're seeing there. Looking across the board then to gold. Gold's benefited to a degree. I see gold slowing up a little bit, which it is effectively slowing up in terms of its move. Just a tiny bit of divergence back into these highs around this sort of 1830 area, or not far from the 1830 area. And well, we'll see how what develops at the moment. It's got to be said it's bullish, but just coming back to dailies there, it has carried on with the higher lows the majority of the time here, which I've been saying for quite a few days here, and it's just pushing through there. But this is quite a key test now, this sort of 1830, 1832 area. If it can push through that, well then onwards and upwards towards 1852, I guess. Looking at the other commodity here, I'm looking at oil. Now oil had a good shove yesterday, continued through. I mean, it's had a good week, oil, pushing back up to those prior highs around about 84.73. Is this the time it's going to shove up? I've been watching it on the bigger picture here, and this wave could easily run towards $90 odd by the looks of things over the bigger time frame. But for now, shoving up quite well. Probably getting a bit overbought. I mean, RSI traders would be saying, well, that's overbought at this stage, but it can stay in these overbought points for quite some time. The price can carry on up here. The RSI will ease back a little bit, eventually show divergence, but it may still have some more spring in its step. I'll be looking this afternoon to see if we've got a move to the upside. Anyway, that's oil. Alright, switching markets now, going across to different software. Let's have a look at the Bitcoin market. Well, Bitcoin did okay out of this, as you would expect. If a dollar's softening, you'd expect Bitcoin and the crypto markets to be pushing up when we're comparing them to the US dollar. And it's exactly what we saw yesterday. How strong this move is, we'll have to wait and see. I've already identified that area around about 45 700 as a point of potential resistance, as the previous support level that may be coming to resistance. I'm not convinced this bigger move is completed. I think looking at the bigger time frames, there could be more downside, but with the long squeeze on the dollar, we could see a continuation. Ethereum following suit, basically, in terms of its resistance point, coming in at 35.95, somewhere around there, 95.96 area. Those prior lows may provide resistance eventually, but if we see the dollar suddenly getting a bit of a kick up, we could see these move down quite quickly. Ripple, similar case. It's already back on Ripple. It never really pulled away that far, never sold quite so far. It's a bit more consolidated where it sits at the moment, and could outperform a little bit. Maybe it underperformed for quite a time. Maybe it will get a bit more of a kicker up there. Other markets pretty much the same. I'm not going to go through them all. Just looking at my well, I say but one of the market favourites at the moment, still pushing up on FTM. Outperforming. I mean, it is pretty much still where it was yesterday at this stage, but it's taken out. So whether or not it can take out these highs, if it can, we'll be seeing quite some shove, I should imagine, on this still on general moves. However, if we see the dollar suddenly turning around, watch out. They could come together and provide the perfect correction here, but it may be due a correction after what we've seen. Okay, indices. Let's have a look what's happened overnight. Okay, no surprise really. CSI sound quite bearish on this, where it's just dropping down. We're going red, green, red, green, red at the moment, and this is quite a bearish candle. I'm looking to see if these lows get broken. That's quite key support area. If it does, well, it's just pointing further downside. Nikkei's not been performing particularly well, just continuing in its consolidated wedge. There's not much to mention on there. As we're moving into 8 o'clock, I can mention the FTSE's open this morning. It's open in a divergence point of view here. We're seeing it coming off a little bit. If you were looking for a bigger correction on a bigger retrace, we'd be looking for a break of the lows from this 74 24 area, I think it was. There we go, 74.20-ish. We'd be looking for a break of lows, but at the moment it remains generally bullish. The DAX didn't hold up quite so well yesterday. Doji bar just couldn't really. I mean, it did gap up in the first place, so it ended up as a positive bar, but selling off this morning and just looking somewhat softer. Again, going back to the FTSE, you see what's going on within government in the UK at the moment, and it seems to make absolutely no difference whatsoever. CAC 40 again did a little bit better, held on to its gains yesterday, but looking soft at the moment. I'm just sort of looking at the waves here. Just looks like it might just roll over, but obviously early days at the moment, or early part of the day. S&P's pushed up well yesterday, but couldn't hold on at the end there. There's still this area around about 47.20, which it's not managing to get another close above it at the moment. A close above that area would look a bit more positive, but struggling to do so. FTSE, the Nasdaq. Well, it's found its support off that 15,589, 590 sort of area. Bounced up here, but again, I'm not massively convinced. Is this just a dead cat bounce and it's going to come back over it? I mean, if it starts rolling back over here, I would expect on this sort of fourth move to be a bit more than just a little spike down. Finally, Dow Jones. Just looking at what's going on with Dow Jones. Okay, Dow Jones has been outperforming the other US markets, and well, it could still continue its shove as well, but it'll probably get dragged with the rest if they start rolling over. But it's got the higher lows, higher highs. It just looks a tad more bullish, but for now, selling. Russell for John. I won't be looking at gold, Bitcoin. Sorry, chap. I've just not got time this morning. But the Russell 2000 for you. Again, this actually looks to me softer, and this may be a sign of weakness in the overall markets. Often when the Russell's looking particularly soft, I mean, a down day, solid down day yesterday. When the Russell's looking soft, some of the other markets tend to follow. Can be a bit of a leading indicator at times, as far as I remember anyway, but it does look soft at this moment. So and having a down day yesterday compared to the others, which were all thereabouts, it's sort of up days or whatever else, it seems odd. Anyway, that's it for me. I wish you a great day's trading. I'll catch you in the morning, 7:45. Bye for now.